you guys were here yesterday, I was wearing my startup hat, my blue shirt and CoinPip and stuff, and today is super formal. This is exactly what we do when we in Singapore, we see MES, we just have to wear what they want to see as well. So for those that don't know me, my name is Anson, Anson Zeall. I am the co-founder and CEO of CoinPip, a blockchain-based money transfer system for businesses sending money to remote workers, manufacturers, suppliers, and so on. But I'm also the chairman of the association in Singapore as the blockchain industry voice for Singaporean companies that are to do with blockchain, whether it's fintech or anything blockchain related. And this group is important is because we have most of the blockchain and fintech startups in this group, where we have one voice to speak to multiple regulators, not only the central bank, which is our MES, or IDA, which is the tech regulator, and so on. Okay. But before I go on, just want to say, being in this industry, someone actually told me, hey, you know what? Blockchain in this industry is like dog years. I'm like, what does that even mean? So if you're only 1 year in the blockchain industry, it's like you've been in the industry for 7 years. The reason is because the industry has been moving so fast, from the beginning treating it as a currency, to now treating it as a technology with multiple use cases, multiple applications. So for me, being in the industry for 2.5 years already, it feels like to me over 20 years, sorry. So, a little bit more about Access. Access right now in the whole region is the only approved association by the government, okay, since June 2014. And since then, we've been working with the Singapore government, liaising with multiple central banks, including Malaysia, including Indonesia as well, promoting what blockchain can do. Not only just as a fintech use cases, but also, for example, for IoT use cases, Internet of Things, for storage, for identification. There's a lot more than just fintech. But because of this whole conference, we're going to focus on the most important, which is the fintech part. Okay, so today I decided not to use slides. I'll try to see if it's possible to describe what blockchain is. So for those that went to the conference yesterday, I had a video that showed what blockchain is, so hopefully that helps everyone understand what it actually helps. Okay. So essentially, what blockchain is a near unhackable, because even Bitcoin, Ethereum hasn't really been hacked to the core yet, but that I know it's not that easy. A near unhackable electronic digital transaction logging system, where each of the transactions can voluntarily be held by anyone. Okay. So why is that important? So for example, if I made let's say a transfer, a transaction onto the digital transaction ledger, which is called the blockchain, once my blockchain gets updated, every single person that has that blockchain as well will get updated as well. So it's sort of like a Google Drive, where multiple users can actually see the updates, know the updates. However, that particular data that's actually being stored does not belong to Google, does not belong to anyone else. The platform is open source, so people can use it. So the data that you store belongs to you. Now, this is something very important, because all this data that we store today, or the messages that we store, we have a central party that actually holds the data. Now, what I'm saying is, most of what I just said is called a public blockchain. Okay? So there is an argument with private blockchains as well, which I'll go into a bit later. So there's also one more factor about blockchains, which is very important, is every transaction that you make into a blockchain, you can actually put extra data on top. You can, I showed yesterday, one of my friends got married, and they put the wedding vow on top of the blockchain. Okay, so how does that work? By a very big lock here that no one can actually try to unlock it. But there's a small slit where you can slip in papers in. So in the blockchain world, it's as simple as I have a piece of paper. Everyone's looking at the piece of paper. They can add data on top of it, their own sort of like graffiti on top of it, data that only belongs to them, before it goes into the file cabinet. In this case, the file cabinet, okay, so the file cabinet in this case is the blockchain. Okay, so things can be stored in there. Now, many banks, more than nearly 1.5 years ago, went to the media and said, oh, I love blockchain technology. I love blockchain technology, it does this, does this. What they're actually saying, they're saying is they love the file cabinet. Okay, so liking the file cabinet where there's no transaction going through, it actually doesn't help. But now they're trying to say is we like to see a private blockchain instead of a public blockchain. Now, when I talk to the central banks, even in Singapore, the use cases that I say to them is arguing which blockchain is better, or maybe something is better than Bitcoin, or something better than Ethereum. That argument is actually irrelevant. We should be thinking of the end user use cases for which one you want to use. Okay, so why think from a use case approach? So for example, if I go to a shop today, a retail shop, I want to buy chocolate ice cream. Buy chocolate ice cream. The retail shop now offers payments in, let's say, Visa PayWave. I'm not sure they have PayWave here yet. And then they also offer, let's say, accept Bitcoin. For me, I actually would use Visa PayWave instead of Bitcoin. Why? I take the wallet out from my wallet, take the Visa card, I just scan. One scan, that's it, I don't need to do anything. It's super easy for the user and super fast. Whereas on the retail side for Bitcoin, there is a user experience problem where I will take the Bitcoin here, I take my wallet out, the retailer then sets up a QR code, I then scan, and then I see it on my phone, the amount, I then click send. You really get the idea, okay? There's a lot of steps involved. So in terms of user experience on the retail side, there is a big problem for using Bitcoin. But at least, this is at least for the startups that have made this possible for the payments, but the user experience is still not there. However, if you go online, I'd rather use Bitcoin than use Visa card. Say, imagine you are on Amazon, you want to buy an Xbox today. When you buy an Xbox, what do? You click on the Xbox, you say buy, and then there's a form they have to fill in. What do you have to fill in? Fill in your name, credit card details, address details, expiry date, security code. What happens here if you're actually writing all this on a public computer? There's actually a lot of security flaws just entering data like this. I know there's some guys with these ideas, so if you want to start a constructive argument, please let me know as well. But so, yes, so if you use a traditional credit card to make payments, it's actually very dangerous online, okay, especially if you don't know if your computer is actually fully safe, compliant, very safe at all. However, for example, if I use Bitcoin, okay, what it does, very similar, the e-commerce site will generate a QR code. My phone, I then scan the QR code on the computer, I then make a payment. Okay? Although the number of seconds on both sides is actually quite similar, using Bitcoin is actually safer. Safer because I'm not actually entering data on the computer. So now we have a new system that Apple introduced, the Apple Pay online. That's equally safe as well. So to me, Bitcoin and using Apple Pay is very safe. Apple Pay is you click on buy with Apple Pay, okay, and then you use your iPhone, and then use your fingerprint scan, and you can make a payment like that. So same concept when you actually are paying, you're not actually entering data. And so from two use cases you can see, it's not that we should always think from a user case perspective instead of just thinking which technology is better. As all our startups and also the subcommittee in our association, we tell one of our subcommittee members keeps saying there should not be any blockchain startups. Blockchain should be a means to an end to be achieved, so that the user, whoever it is, for the government, if the user is a startup, should make things easier for them, or cutting the cost or whatever. Okay? But regardless of what the argument is, blockchain is really a revolutionary technology. Today, when we send in emails to people, we don't actually send an email and let's say we put an attachment there. We don't actually delete the attachment. We actually keep a copy of an attachment. Now, by doing this, we don't know what is an original because you can make copies any single time. Now, if you send data, for example, Bitcoin, Ethers, whatever, through blockchain, you're actually sending an original piece over to the other person where you can't actually keep a copy. This is actually quite revolutionary online because one, it's secure, two, it's data being transferred that are always the original piece of data instead of having multiple copies. So this solves a lot of problems, especially even for fraud. Obviously, Bitcoin's main problem that it solves is what they call double spending, because now you can't cheat the system. There is a blockchain that actually proves that you can, the transactions actually went through. Okay. So if you use, for example, blockchain in a fintech startup, unfortunately, there are two things that you need to do to grow your business. One is you, just like any other startup, you grow your traction, grow your customers, grow your business. The other is to liaise with the government. Okay? But like for example, an e-commerce company, all you need to do is to grow your business because there's not many regulations you are either breaching or on the gray line and so on. So it's just the nature of this industry. We have to liaise with both the government and grow our business. Now, very last part, with the regulator's perspective, you need to know what your aims of growing is for the fintech ecosystem. So say, for example, UK has been very successful in growing their fintech ecosystem, growing more jobs, creating a whole new sector, putting banks and the fintech startups on the same level playing field. So UK has the mindset of growing a whole entire industry as well as creating jobs. If your mindset is about creating jobs, then you should really think about leveling the playing field with the incumbents as well as the new startups. But however, if your assumption is if you protect the incumbents because it makes the financial system safer, then there is something that this is something that obviously the fintech startups will need to negotiate with the government. But I'm not saying everyone should follow the example of UK. Every central bank, every regulator has a different way of working. In US, for example, if you speak to US regulators, you're used to that method, and you bring the same method into Singapore, it does not work. Okay, every regulator has a different way of approaching things. So, to basically end my speech, I am very excited to be first time to be in Vietnam actually. And before coming in, I was already very excited because I know the population here is super young, much bigger than the baby boomer population, over 100 million. Definitely, there's a lot of use cases, even in the fintech scene, for the Generation Y and millennials. So I hope in the future, near future, Vietnam can be a very good fintech force to be reckoned with. Thank you very much.